we need to talk about Fantom and Bitcoin. Oh man, so Fantom and Bitcoin both coming to a critical level in their respective charts. Should we be starting to panic? Should we be worried? I'm going to break down the key levels in both of the charts. Where could we be falling to? Is there an area we could pick up support? As you can see from the charts here, Bitcoin producing another red day. You've got Fantom opening up the day over 2% in the red. What is going on, guys? You've seen my video saying, look, at this moment in time, in this current juncture, we are still in an upward trend, but things are starting to get a little bit hairy. Bitcoin coming into its EMA ribbon, trying to build some strength. You can see that in the chart. But look what happens when I switch over to the Fantom chart. What do you notice? You notice immediately that Fantom is far further into its EMA ribbon. And not only that, it's forming this triangle. You can see this support which was holding at around that 42 cents mark. This triangle is now being tested to the bottom side. So we could be days away from a potential breakdown, and that could give some painful price targets on Fantom, which we're going to map out. Now, it doesn't necessarily mean we think it's going to go there. This is going to depend on Bitcoin, right? It's going to need Bitcoin to continue to have days of weaknesses for Fantom to play the bear scenario out. Now, one thing we know for sure, and we can, note down on our little notepad, when Bitcoin was moving in January, Fantom rocketed, right? And that, for me, is the major thing I was looking for. What I was looking for across my portfolio during that January rally, it was a teaser rally, right? It was a sign of what will come when a bull market ensues. And I wanted to look through my portfolio and make sure that the ones I have, not only I'm happy with them fundamentally, happy with the tokenomics, but do they have the attention? Do they have the pumpability to see it moving when markets are green? And you definitely saw that with Fantom, one of the outstanding performers. That comes with the other side of the sword. Now, what's the other side? The other side is when you have a coin which moves so fast when Bitcoin moves fast, guess what happens when Bitcoin falls to the downside? Yep, it takes a disproportionate move to the downside as well. This is just normal. If you've moved bigger, your retracement's going to be bigger to the downside. You're going to have bigger gaps to fill on the way down. When you rocket so fast and so hard here like Fantom, there will be some painful retracements. But for me, that's perfect. That gives me more opportunities to buy the dip because my conviction hasn't faltered on Fantom whatsoever. Speaking of conviction faltering, if you haven't watched my video from yesterday, I do explain which project, which I currently hold today, I'm really worried about in my portfolio, and I go give you an update, and I'm walking you through my emotions, right? When is it that it's okay to sell? What makes me want to sell? What's paper handing? What's losing conviction? When is it okay to sell? Because I know a lot of new and particularly young traders and investors, they struggle with that. So go watch that video. You can get my, literally day-to-day insights as the data's coming out. I'm sharing with you how my conviction's changing. So that's what we're looking at here in Fantom. You're coming close now to this EMA ribbon breaking, and if it does, you can immediately see here that the price targets won't be too fun. In fact, if you wanted to do it as a little kind of price target here, and I'm doing this very rudimentarily here, but if you made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on SKILLSHARE. For those who aren't familiar, SKILLSHARE is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. To give you an idea, if you break down this triangle, you can look at price targets coming all the way down here, right? Now, do I believe we're going to get to 18? No, absolutely not. But that's what the target's telling me. More realistically, where I think this can go if we lose our EMA ribbon is first point of call, 38 cents, right? 38 cents around this region, 38, 39 cents. You've also got your 200 exponential moving average, this blue colored line here, at the same space as this horizontal support. You can also see that's where you consolidated a little bit towards the end of January. Thereafter, I will be looking for support coming all the way down at 30 cents. You can see 30 was really important level. If you look here, when we had that horrible day, well, I say horrible, but it's 8% down day here on the 18th of January, in the middle of our run, right? We started running up and we had a couple of days here where it got painful. Look where we rotated. Look where the support came from, 30 cents. Okay, so this 30 cents mark here, this horizontal, is going to be our next support. So these are important levels I'm looking at. But first, the bears have to make this lose its EMA ribbon. Okay, so we have to keep an eye on this. It's this EMA ribbon. Let's bring out the Bollinger Band as well, because I want to show you what's going on here. You can see we've had a move here predictably from the top of the Bollinger Band down to the bottom. Balls came back in, created a lower high, and got pushed now back down to the lower end of the Bollinger Band. Lower end of the Bollinger Band could even create a little bit more pain, back down to 41, 42, which is obviously where we're going to want support to come in. Right? If you're looking at this from a bullish stance, if you want the move to continue, you've come and tested this line here once, you've bounced, you've come and tested it again. You need to bounce and create a W pattern, break through the 58 cents mark and work your way back up to 68. That's the bullish case. But in order for that to happen, Bitcoin will have to do the same. Because if I switch to the exact same chart on Bitcoin, look where Bitcoin is, slightly further ahead of its move, not quite towards the bottom of its Bollinger Band like Fantom was, but it needs to do the same, right? It needs to rotate here. You can see Bitcoin's got a high, it's got a low, it's got a higher high, and now it needs to create this higher low and go push through that 25,000 mark. We've spoken about this extensively. Go watch my video over the last couple of days if you want a deep breakdown into why this $25,000 mark is so important. But that's what needs to happen to keep this move continuing. But you can see there is a big gap here still to the downside. Can the bears take advantage of this? Can the bears push down to that 22,000 mark, which is important support for us over at Bitcoin? The other thing I wanted to show you is obviously on the weekly chart. You notice here that we're getting a severe bit of pressure from this line. We fell here, Terra Luna, we rallied up to 25, got sent back all the way down, go back here, rally to 25, get sent back down, right? So what you got to look at here from the weekly time frame is we could be forming an inverse head and shoulders pattern. Now, this is you're going to have to be very, very patient on this pattern to play out, right? This could take weeks for us to come back down. Bitcoin will have to create some support around 20, maybe even 19, and then have a couple of weeks of positive again. So there's loads of different scenarios that can play out here because we are facing a critical stalemate with the bears. And it's no surprise. I've shouted this before. The bears will be strong here at that 25K mark. And you can see they're starting this week off on the front foot as well. So we're getting another negative week so far here printing. This is the last day of trading in February as well, okay? Guys, so if you take a look at the traditional markets, you can see that they're just inching a little bit positively now here in the pre-market. Let's see how they perform throughout the day. But I saw this quote from the CEO of 50 Park Investments. I thought it was really good, so I share it with you. He goes, February will go down in history as the month where the market pulled back to digest a very strong rally you saw at the end of December into most of January. This is a pullback month, it's a rest month, and that's a good as long as support is defended and support holds, which is at last week's low. Now, this is exactly what I'm trying to communicate with you guys. We are at an important level, and it's okay if we have a pullback. If you look at what Bitcoin's achieved here from January, you've had 21% weeks, you've had an 8% week, you've had a 4% week, and then you've had a couple of negative, and then we've eclipsed it with another 11% week. A couple of weeks negative. As long as the support holds, we're going to be okay. And if you switch that back down to the daily, as long as we can turn around here on the EMA ribbon, things are good. Where things start to get a little bit hairy is if we lose this level here, right? This level here, if you take this doji candle low, which by the way, you can learn more about ijaz.uk/TA. If you take this doji candle low, here is where you do not want to go lower there. That is where we have to maintain support and not create a lower low. If and up until then, I'm not panicking. There's no concerns here. Any pullbacks down here at 22, I'll be nibbling. And I want to accumulate my portfolio because we're still in an upward trend here on the daily. On the weekly, that's where you have to pay respect to the bears and say, okay, maybe the bears have a little bit about them and I need to watch out for this. But even then, they've got a lot of work to do to push us down and reject us from this weekly EMA ribbon. And when they do so, they can't just push us down here and then we take over again, because then I just showed you we form an inverse head and shoulders pattern. So when they push us down, they've got to attack all the way back down to 16,000. That's not going to be easy for them, particularly if we have a good February with good CPI data, with evidence that inflation starting to come back down again. Then January could just, in hindsight, be that month where we just had a little bit of a worrying economic data, a little bit of a rest after the pump, and now we're going to get a positive February using a positive March, using February data that comes out. So coming back to the Fantom chart to summarize, I'm looking for a clear bounce here at 42. If the wider markets are looking positive and Fantom can bounce at 42, great stuff. Let's create a double bottom pattern and let's go attack that 58 cents mark again. If, however, we break this triangle to the downside, then you immediately have to look at 38 cents for support. Failing that, you're looking further down here where my cursor is at 30 cents, and failing that, you're looking at 24 cents. Now, no need to get to all doom and gloom. I'm just sharing those levels with you so you're prepared, so you can predict your buys and get your DCA opportunities ready. That's personally what I'm going to be doing. The further we fall here, the more I'm going to DCA. And looking at this weekly chart here on Fantom, you can see 38 cents is definitely going to be interesting support coming deeper into its EMA ribbon. Critical moment in the charts for all major cryptos, and it all leads off the pressure that is on Bitcoin on that weekly chart. This is an important level at 25. Be patient. There could be more of a pullback, but those present more of an opportunity, in my opinion, to buy the dip and dollar cost average. I'm staying patient. Like I've said many times, I'm expecting a lot of volatility, and I'm gonna sit there, stay pragmatic, follow my rules, and not get caught into the foam. I'm not playing the game of chasing these crazy altcoins right now. I'm not playing the game of, oh look, there's an Asia pump, let me go chase that. Nope, methodical, accumulate, eat my veg in Bitcoin, Ethereum, make sure I've got my layer 1s, make sure I've got my layer 2s, or do I have some data oracles? Build my portfolio, as this is the year for accumulating. I do not want to get into the next bull run, look back and say, I was so busy messing around with those meme coins or those Asian pump coins that I didn't buy a bit more Ethereum, I didn't buy a bit more Bitcoin, I didn't consolidate my portfolio to make sure I've got the big hitters ready for the next bull run. Hope you guys enjoyed this video. Don't forget to smash the likes. Don't forget to subscribe. Go watch this video here because this altcoin really does have me worried, and I'll see you in the next one.